Hey traders, hope everybody's doing well and you're having a green day and a green week. My week has been fantastic. I'm still going strong on my streak. Haven't had a red day in nearly 3 weeks now. Monday was fantastic. Monday was over $2,000 of profit. Yesterday was really small in comparison, just a couple $100 profit because the action yesterday was real choppy, so I was kind of nervous about getting involved, so I kept it real small and just made a few $100 yesterday. And then this morning I made over $1,000 in 15 minutes. And I'll put up the ins and outs right now on the screen so you can see. So this is what I was dealing with today. So obviously I was super happy about that and happy about the week so far. But one thing that I wanted to talk about today, I'm not going to make another video about the detailed ins and outs. You can go ahead and check out the screen capture that I put up and do that research on your own if you want. But what I want to talk about today is how the price of the options contract and the amount is going to affect how much your profit and loss will change minute by minute as price action changes. So the first thing to remember is that this should be fairly self-evident, but I just want to reiterate it. When you're dealing with more expensive options contracts, the underlying move in the stock price is going to affect your P&L a lot more. So for example, like today I traded Meta and I made quite a bit of money on Meta. And one of the reasons why I was able to do so well so quickly is because Meta, relatively speaking, is a much more expensive options contract than something like an MU or even an AMD. Like Intel, for example, Intel is very, very cheap. Like you can get into an Intel options contract for definitely under $100 per contract for a at the money contract. Whereas on Meta, if you want something that's close to at the money, you're probably talking about more like $500 per contract. And so because of this, like if you spent $35 on one MU contract, it can move a little bit and it's not really going to change your P&L all that much, both to the upside and to the downside. So you'll need a lot more of a dramatic movement on a less expensive contract in order to actually see anything significant as far as your P&L. So what that means is that you either need a lot bigger move or you need to hold a lot more total amount of contracts for that move to be meaningful to you in any sort of way. Whereas something like Meta, being a $500 options contract, you could have one contract on Meta and it just moves a little bit and then suddenly, you've made quite a bit of money on that one contract. Now, of course, it works the other way as well. So if price suddenly starts to go against you and you're holding that expensive contract, you might find yourself, suddenly losing a lot of money. And it can be pretty jarring to somebody who's, not used to seeing such dramatic up and down price action movement on their contracts. So it's just something to pay attention to. There's no absolute right or wrong way to trade it. That's up to you. It's something that everybody should experiment on different ways of trading. You should try getting yourself a lot of contracts of a more inexpensive stock, and you should try to trade fewer contracts of a more expensive stock. just kind of see what resonates to you best in terms of the way that you can handle the movement of the price action as you go. So I'm not here to tell you that one way is absolutely right and one way is absolutely wrong. As I've said many times on this channel in the past, there are very few things in trading that I would consider to be the absolute right or wrong thing to do. There's a lot of gray area when it comes to trading. So trading is not for someone who needs to see things in black and white. Trading is something that is for the person who can see the gray areas and who can see nuance in things and who can understand that what might be the right thing to do in a particular situation is not necessarily the right thing to do in another situation. So if you're just looking for simple answers, like black and white answers to black and white questions, you're not going to get it. You have to play the chart the way that it develops each day. And that's what I'm able to do, and that's why I'm consistently green. And if you are also able to do the same thing, you can also be consistently green. It's just a matter of the combination of having the knowledge, having the discipline to do the things that you know that you should do and don't do the things that you know that you shouldn't do. And then, just the stick-with-itness to not give up when you have those few big red trades or red days, because everybody has red trades and everybody has red days sometimes. It's not the end of the world. You just go back and look at what you did and say, what is it that I did right or what is it that I did wrong? Figure that out and then change it up and do better the next time. So that's it for today. Hope you enjoyed this little chat, and I'll see you soon with more content. Take care.